At the center of Stoic philosophy is a simple distinction. Some things are within your control and others are not. Like you can't control whether the market rallies after you buy, right? And you can't control whether a perfect setup loses, and certainly you cannot control the news, the volatility, the algorithms, or the actions of the other traders out there. But what you can control is your position size, your entry criteria, whether you revenge trade or not, where you place your stop loss, or whether you continue trading after you hit your daily loss limit. And I know this sounds obvious and you probably already know this, but emotionally, most traders live as though the opposite were true. They obsess over the outcome they cannot control while neglecting the behavior that they can. You see, they stare at every candle willing price toward their target, and they become so angry when the market fails to follow their analysis. They treat a losing trade as if the market violated an agreement, but the market never agreed to anything. Your analysis is not a contract of what the market is supposed to do. It's only a hypothesis. You see, the moment you understand that, trading becomes to feel different. And many traders say that their goal is profitability. Yes, but underneath that goal is often another need. Like what? Maybe the need to be right. Maybe your prediction that the Nasdaq will move higher. You enter long, but what? Price begins falling. Instead of accepting the new information, your ego begins defending the original idea. You find another support level, you switch to a higher time frame, you search for a reason to stay in, you move the stop farther away, not because the setup improved, but because closing the position would force you to admit that your prediction was wrong. Stoicism challenges that attachment. Your opinion about the market is not your identity. A losing trade does not make you unintelligent. Being wrong does not make you weak. The market moving against you is not a personal rejection. What is it? It's simply information. The Stoic trader asks, so what is the market showing me now? And the emotional trader asks, how can I prove that I was right about my analysis? And one responds to reality and the other argues with it. And the market usually charges a very high price for that argument. So imagine two traders taking the exact same A plus setup, right? Both follow their rules, both risk the correct amount, and both enter at the planned location. The trade loses. The first trader becomes frustrated. He believes that because he followed the plan, the market owed him a win. And he immediately searches for another trade to recover the loss. The second trader accepts the outcome. Not because he enjoys losing, nobody does, but because he enjoys the fact that he's following his rules, but because he understands that his responsibility ended with proper execution. He controlled the process, and the result belonged to probability. And this is one of the hardest lessons in trading. A good decision can still lose, and unfortunately, a bad decision can win. You see, if you judge your performance only by your P&L, the market will train you incorrectly. You may break every single rule and still make money and believe that you actually traded well. And you may follow every rule, lose money, and believe that you failed. Stoicism teaches you to judge yourself by your actions, not by the outcomes outside of your control. Ask yourself, did you follow your plan? Did you manage the risk? Did you remain patient? Did you stop when your rules told you to stop trading? These kind of questions matter. You see, the Stoics often prepared themselves for difficulty before it even arrived, not to become pessimistic, but to become less surprised. A trader can apply the same principle before the market opens. Imagine your first trade losing. Imagine price stopping you out before moving in your direction. And imagine missing the best move of the day. And imagine finishing the session in red. Then ask yourself, what am I going to do? Will you increase your size? Will you chase? Will you abandon your plan? Or will you accept the event that you already prepared for? Most emotional breakdowns happen because traders secretly expect the day to go well. They expect their best setup to work. They expect price to respect their level. They expect the session to provide an opportunity. And when reality fails to meet those expectations, frustration appears. Preparing for adversity removes some of its emotional power. A loss feels different when it is treated with a normal possibility rather than an unfair surprise. Look, a candle moves sharply against you. That is the event, and your mind says, exit now, add more, get the money back. This is the reaction beginning to form. You got to understand that between the event and your action is just a small space, and that space is where discipline lives. Stoicism is not the absence of emotions. It is the ability to observe emotion without immediately obeying it. You can feel anger without revenge trading. You can feel fear without moving your stop, and you could certainly feel FOMO without chasing price, but the feeling is real. You don't have to be a robot, but it does not have to become an order. Your feeling does not have to make you move, does not have to make you behave in a way that destroys your account. Before taking an emotional trade, pause. Like, remove your hand from the mouse. Like, take one slow, deep breath and then ask, is this decision coming from my plan or from my emotional discomfort? Like, that simple question can save an account because emotional traders act to change the way they feel. And disciplined traders act only when the market meets their condition. Look, Stoic indifference is often misunderstood. It does not mean that you stop caring about money. It does not mean losers become meaningless. It means you stop attaching your self-worth to each result. You can care deeply about your process while remaining emotionally neutral toward one trade, and one trade is only one sample, right? And one red day is only one red day. One missed opportunity does not define your future. The more meaning you attach to each individual outcome, the harder it is to trade rationally, to trade like a successful trader. A single loss becomes evidence that your strategy does not work. A winning streak makes you believe that you're invincible. A missed trade feels like money was taken from you. And Stoic distance help you see each event for what it is. It's temporary. It's limited. It's part of the larger sequence. And consistency becomes possible when no single outcome is allowed to control your identity. Listen, much of trading frustration comes from resisting what has already happened. You were stopped out. The move left without you. You closed too early. You finished the day red and the event is over. But the mind continues to fight it. Like, I should have not happened. Like, I should have not done that. I should have held it. I need to fix this. You see, that resistance creates the next mistake. Revenge trading is often an attempt to rewrite the past. But the next trade cannot erase the previous one. It can only create a new outcome. Stoicism teaches acceptance of reality as it is, not as you wish it had been. Acceptance does not mean approval, right? You can review the mistake later. You can review your process, but during the session, reality must be accepted immediately. A stop was hit, the trade is finished, the next decision becomes from zero. Before the market opens tomorrow, right? Define what's within your control, your maximum risk, your setups, your daily loss limits, your maximum number of trades. Then identify what is outside of your control. Whether today trends, whether your first trade wins or not, whether the market provides another opportunity, and during the session, focus only on executing your trade. After each trade, go ask yourself, like, did I follow my process? Not how much did I make? And at the end of the day, review your behavior. Like, that's why you need to review. Where did the emotion influence action? Where did ego resist reality? And where did you remain disciplined despite discomfort? This changes the purpose of your trading journal. It stops being a record of wins and losses. It becomes a record of character. Look, here's the conclusion, right? The market will never give you complete control. It will only surprise you. It will reject your analysis, trigger your stop, move without you, and tempt you to react emotionally. You can't do that. Like, you cannot control any of that. You can't control whether one loss becomes five. You can't control whether fear moves your stop. You can control whether boredom creates another meaningless trade, and you can control whether your ego needs a revenge. That, my friend, is a stoic edge. Not predicting every candle, not becoming emotionless, not forcing the market to behave in the way you want it to, but remaining grounded while uncertainty unfolds. The consistent trader does not ask the market for emotional comfort. He does not need every trade to validate him. He does not demand the reality to follow his market expectations. He controls the process. And the outcome, he lets go of it. Because the moment you stop fighting the market, you finally have the energy to master the only thing that was ever truly yours to control. Your mind. All right, master your mind, master the markets. This is NQ State of Mind. If you like this video, please subscribe. Help a brother out. All right, we'll see you later.